Day Report. I'm Marlon Bowling with you. We're watching your ag commodity trade coming down the home stretch of a Wednesday trading session. And here we have a little expert help guide us toward the closing bell today in the form of Todd Horwitz. He is with BubbaTrading.com as we go to the trading floor. Todd, good to visit with you once again. This grain trade has been a real yawner once again today. I'm sure the traders are just frustrated as they can be once again.
Hi, Marlon. It's great to be here. And it is a yawner. And this is something I want to warn everybody about. We call this the stench of complacency, where everybody's just kind of being lulled to sleep that nothing is going to happen. And it's not, probably not today, but all of a sudden, out of the clear blue sky, there will be a move that will start to happen. I'm not quite sure which way. I would think it would be up, but always be on your guard here, just in case. This is a very slow period of time and not a lot going on, and certainly not any excitement of worth jumping into a trade right here. There's really nothing happening whatsoever.
Well, if you look at almost any grain chart, whether it's corn or soybeans or wheat, I mean, it looks like it started out in the Colorado Rockies and ends up down in eastern Kansas by the Missouri River. It's just a continual downtrend, and it just goes for years, and it just seems like there's no hope of breaking that downtrend line there. Now, here's a look at May corn. Other than a little spike last summer there, I mean, it's just gradually working lower and lower and lower. Everybody's getting really demoralized.
Well, I think that is part of the problem, and a lot of it you can attribute to the Federal Reserve. You can attribute it to a lot of the general economy with the way that they've handled everything. I mean, if a Bloomberg commodity chart just touched a 40-year low in the commodity space. So overall, we're not seeing a lot of enthusiasm, and we've got too many problems with other parts of the economy. And of course, it always weighs down onto the producers and the farmers, which get punished the worst out of this whole deal. But until they get out of the way and until they stop trying to engineer and financially maneuver this market, that is going to be an issue going forward. Hopefully we'll get some of these things settled up rather quickly and we'll start to see some movement, but we are obviously coming down from $8 corn, $14 wheat. I mean, it's been basically a slide, as you said, and until something really changes there, we're going to see still some continued action. I do like the space. I think we're at probably a reasonable level to step in, but right now with the lack of action and volume, I'm certainly not a player yet. Although I do have a position.
Well, let's take a look at the prices right now on the corn. We'll go there first, and right now the May corn is unchanged. Surprise, surprise, $3.55 3/4. December's up a whole 3/4 cent at $3.74 1/2. Now looking at the soybean trade here, the May contract is 3 higher at $8.61. We backed off of our earlier high by getting close to 4 cents now. However, we are a nickel off of our low too. We have July up 3 1/4 at $8.67 right now. On the wheat trade in Chicago, May wheat, we are now 4 1/4 higher at $4.50 1/4. So we're closer to the high than we are the low by a long shot. Right now we're off of our low by a good 8 cents. We have July now 4 higher. Kansas City wheat has May now trading 6 higher at $4.55 1/2. That's 2 ticks from our high of the day. And July new crop 5 3/4 higher at $4.65. So a good performance being turned in the Kansas City market today. And looking at the Minneapolis trade here real quickly, we have the May contract 2 3/4 higher at $4.88, and July 3 1/2 higher at $4.96 1/2. Todd, in this wheat trade, some analysts, just real quickly here, it sounds like this is more just short covering today. Is that your perception or not?
Yeah, no, I think it's purely a dead cat bounce. I think one thing you have to watch for here, Marlon, is wheat made a new contract low. I would not be surprised to see corn and soybeans. They're pretty close. I'd be surprised if they didn't come down there and touch that low. But I think wheat is just strictly a dead cat bounce is correct.
Interesting. Okay, well, that's the same reference we had earlier in the program. All right, now taking a look at the cotton market here. Here's another one that's been getting pounded for a few weeks, and right now it's showing a little bit of a pulse. We have the May cotton 29 points higher at 56.40. So a bit of a bounce in the cotton market after going way down below 56 cents for a while early this morning. We'll pause for a quick break. We'll come back and talk livestock trade with Todd Horwitz when we return right after this.